congrats to you. At least before the end of this session, you'd be able to do something and analyze for yourself. Well, this is lesson 5. It is one of the most important lessons, like, that is important as regards you being able to predict the market. Not predict, rather, you being able to speculate for either buy or sell. Because without this, a whole lot of things would you just be mixing them up. But once you understand this particular lesson talking about market structure, how to read the market and apply every other thing builds on this. So before now, the previous lesson we treated in lesson 4 was identifying support and resistance. The one before that, we were speaking about candlesticks. The other one, we spoke about um, opening accounts, being familiar with the interface. So this is where we start digging deep, and you listen, get your pens ready. So what is market structure? Market structure is what helps us identify either the market is in an uptrend or a downtrend. It helps us identify who is in charge in a particular session, and it's what answers those questions to help us know to choose either to go with the buyers or go with the sellers. So for us to, market condition, we have three types of market condition. We have the uptrend, we have the ranging market, where market is neither making new highs or new lows. This is the ranging market, it's flat like this. Then we've got the downtrend, where the market is just making new and new lows. So these are the three direction that the market moves. There's no other way that the market moves. It's either going up or is in a consolidation phase or is in a down phase. This happens from support levels that we identify. This happens from resistance levels that are identified. But there are some times, so this can either happen after a very massive push, and price, when you see price ranging, it's most likely kind of resting at that point before it picks its net direction to continue to the upside or down. Also, this ranging market happens when we have major moves downward and price is kind of like resting at a point. It's not moving anywhere. It's uh, just there, neither making new highs or new lows. And this is the kind of market you don't want to be trading. This particular market condition, this mid one, ranging market, we trade either in uptrends or downtrends. And what would you see that will make you know that this is an uptrend? So look at the characteristics of uptrend, where market breaks the previous high, comes back and fails to not break this low, and if it doesn't break and it makes a new high, then it's an indication of an uptrend. So next, we are going to be seeing the push down here as a reversal, right? As pullback. Then it doesn't take out this low, and makes a new high. Then in this case, we are in an uptrend. That's how you identify an uptrend, where market is making new highs, but it's reserving the low. But in the case it breaks the previous low, then there's a question to that. You understand? Because in an uptrend, market will continue making higher highs. So what? Higher highs and higher low, higher high, higher low, higher high, higher low, higher high, like that, until when we have a point where uh, it's taking out, a new low is taken out, then it will start indicating to us. Because in an uptrend, anytime a previous low gets taken out, it doesn't necessarily mean the market trend has changed just immediately yet, but it's a signal that, like, there's something happening. So look, in an uptrend, what characterizes an uptrend? Market is moving up, all of a sudden it takes out. So this guy here is this low, it takes out this low, then it comes and it couldn't make a new high. It comes, it respects this high and go then again and make a new low. In this case, we are starting to see some bearish momentum build up. So what we're going to be looking at the next pullback is just a pullback so that we could enter, because remember, in anticipation for continuation to the downside, right? Let's do this like this. Market is coming, and it makes a new low, couldn't make a new high, lower low, couldn't make a new high, then lower low, couldn't make a new high, then lower low. So this is how you know a downtrend and an uptrend. So remember, we treated support and resistance. This is a support right here. This is a support. So like I told you in the previous video, if you watched, support and resistance, we use other things. You don't just buy because it's a support. You don't just buy because it's resistance. So this is a support level that was not broken, So all these lows are most likely gonna be support. So it's in this kind of market condition that we'll be looking for opportunities to buy. So even though price comes here, we're not gonna be selling. We're gonna be allowing it to break that level, come back, test that level, and then we take our position to buy, right? So it's this market. That's why I told you it's one of the most important concepts. So here, these are resistance levels. This now in a downtrend, what we'll just be looking out for is a resistance being taken out, because this is a support taking out tests, So this is how market moves. So take note of that, and anything you want to do to understand market structure, once you understand it, a whole lot of things are going to be easy for you to be able to read the market. But once you confuse this, you're going to be hurt. So this is it. So after a long push down to the downside or upside, you find situations where market is coming, it neither makes new low and it neither breaks this high. It neither breaks no low, neither breaks this high, neither breaks this low high. It keeps moving like this, same high, same low, same high, same low, until it finally decides at some point to take a direction. So in this kind of market condition, it's not advisable to trade. You just allow it. All you need to do is mark those levels where market is neither failing to break or failing to break above, neither failing to break above or below, right? And then you wait for it to take a direction to either come here, then you wait for the retest of that level, then you continue like that. So, or you wait for it to take direction to break to the upside, test that level again, and start making new highs and new lows, right? I hope this makes sense to you, because this is what every other thing that we are going to be adding, we're just going to be adding it to this. So these are the ways market moves. So this is what they call market structure, because this is on the premise that we are able to identify either uptrend or downtrend. With that being said, let's head on to the chart. Let's identify some examples of market structure. So like how we do our things, we start from the daily time frame, just like the way we did for support and resistance, right? What you see on the higher the time frame, the more relevant they are. So let's start our story from here. So you could see from daily, what's happening. So price has higher, new high, you couldn't make any low, new low, higher high. We will not call this higher except the high that is higher than this high, and the next high that's higher than this guy is this guy. See, it created a new high. It came down, but it couldn't break this low. This is a new low. Created a new high here. If you go to the lower, you see it broke here, it tested here, and it moved to this side, and then market all of a sudden came. He wanted to take out this low, but it's not. So what we identify as like that break you see market came, but it didn't break with the body, so it's still in uptrend. But then notice what happens. Market came, built back up, but it couldn't make a new high. But then it now went ahead to break this previous low. It couldn't make a new high. It went on to break this low. This was an indication that something is happening. There's something happening for price to take out this low. Price hasn't taken out any low that made a new high since it started from this up until this point, right? And then it took out this low. It's an indication, but not just yet. It came up again. It couldn't meet up with this high again, right? Then at this point it broke this level again. So at this point we would have started becoming bearish. What's happening? Yeah, just to so I lost that, but then this is what we've been doing, right? New high, new low, new high, new low, high, low, couldn't make a new high, broke, couldn't make a new high, broke this level, and you could see couldn't make a new high, broke this level. So in this type of market condition from the daily, we are in a downtrend, as you can see, because new lows keep being created. So it's only a matter of time that we are seeing before this new low gets taken out. Because see, market came or it couldn't even break this high, but then it's attempting to break this low from where we are. So we'll be hoping to see this guy get taken out until we start seeing situations where this particular high gets taken out, and from where it comes it couldn't break. This new high gets taken out again. This guy can't get taken out, So that's when we would say we are in an uptrend. But from the daily perspective, we've identified that this particular asset here is bearish. So from the bigger perspective of things, market is much bearish, right? So let's drill down to 4 hour. You could find it, but just know that the higher. So right now, in the mini sense of things, look at let's start the story from somewhere. Let's identify it together, right? So this guy, this was the high he created. So let's start the story from here. Example, but from bigger, we know that this is just a retracement. So that is how, if you understand these things, how you'd be able to identify a retracement and pullback, because the fact that market is coming down doesn't mean it's a downtrend. It doesn't mean. So for this short time frame, like, right, so market, this was the low it created. It couldn't make a new high. It came, created a new low. But notice what happened. Market retraced as normal. We are expecting it to make a new low. It couldn't. It went on to make a new high. We were expecting it to break this low, but then it couldn't. It made a new high. So this, in the short term of things, and this period, now we'll now be waiting for this pullback so that we could enter. And you can see it came back to test that resistance, this level, test this resistance level, because price came here, reacted, but then it broke above in conjunction with breaking. It came, it tested, and it made a new high, right? It came again, it couldn't make a new high, but then something happened. At this point, this was where the structure started changing, but it didn't just change immediately yet, because we had this body close. So what you identify here is when the body closes, when the body of the candle closes below the previous low, like that's when you would consider that as a change. It closed, then went on ahead. This particular high, did it close below it? It came to that level, but it couldn't make a new high. So it's kind of like equal high because the body didn't close. You could just see it's a week and came, right? Then wanted to make a new high. It made a new so-called high, but then look at what happened. Look at the previous low. Price came. Did the body close? Is there a body close? Not yet. It came. It couldn't even attempt to like make a new high. Then went on ahead to break. Went on ahead to break this new low. It couldn't make a new high. You see, trend has changed from this one. Went on ahead to break this low. Couldn't make a new high. Went on ahead to make this. Couldn't make a new high. Then all of a sudden we are seeing market took out the previous high. It came like you want to, but then it did equal high and it made a new high again. Let's leave this one here. Right? Are you seeing how like the it's moving? Alright. So from this point, we were in lower low, lower high. A new high is created. A new low couldn't be created. A new high is created. Higher high came to this high up until this point. Came higher high, but then this low was taken out. So it means this whole move is a retracement. It made a new low. It couldn't make a new high. It made equal high. Then we went on ahead. It couldn't because you won't consider this as change. The wick is when the body closes, and when the body close was at this point. This was where the shift happened. A new low was created in this point, lower low. You couldn't even attempt to reach here. You made a new low again. It came back to that same level. It didn't take out. It didn't make a new low, and it didn't make a new high. So this is that ranging situation we're talking about, right? Neither making new highs or lows for this period, but then it finally took out, make it a new low. It has taken direction, came back to around that level, that range it broke out from. Couldn't make a new high either. So then it went on ahead, lower low, right? Lower high. So that's how you go. That's how you read chart. You could see from here it made a new low, came back, couldn't make a new high, equal high. Remember, it's the body close. Any body close, you see, is weak. It's all weak, right? So you consider this as equal high, made a new low, lower than. So that's how you identify trends. Equal high, at this point, this was a range, So you see how everything we are speaking about are coming in place. Look at this period, you wouldn't have wanted to be trading here because it couldn't make any high, couldn't make equal high, equal low, but then it broke out. But then this breakout, a whole lot of things you are seeing here. I'm just giving you examples of on things, but then from the daily, remember that we are on a downtrend from the daily perspective, and other thing happening. So currently, if you look at things, market is ranging at this zone, right? But then because of the space in between, we could trade it. But then at the grand scheme of things, looking at daily, we are looking at this low will get taken out. So the market is after this whole push. under this whole push, you will notice the market neither making new lows or new high, because if this guy should get taken out, this zone, then this zone should get taken out, and also this zone should get taken out, and there will be a shift. That's when the uptrend will start, when market is able to come from this level, break this low, fail to break this low, anyway. If he likes, let it come here, but so long as it doesn't take out the previous low, go on ahead and make a new high again, then come back and can make a new lower low, but then it makes a new low and makes a new high. Then at this point is when we would say we are in uptrend. But in this scenario right here, market is ranging, and from the higher time frame, like, it's pointing us down. The market is still bearish, because you would see that, like, the previous high, lower low, lower high. So look at that's where we identify the major things that matter and the ones that are just there. So this guy is the major, is the previous lower low, lower high, lower low. So he took out this low here. Alright, let's delete this guy. So it's what the daily is, what higher time frame tells you follow. So so from the big time frame, lower low, lower high, price is coming. Is there, would you say there's a change, there's a shift? Yes, there is, because this particular low, let me even use a line, this particular low here, this was the highest point price came. Price has closed below it. Price has closed below it, regardless of whatever it is the same, but then it's not wanting to fail, right? And this is the previous. I would say that there's a switch when this high gets taken out here. That's when we'll start, like, the indication for buys will start, like. But then in between, just know that this is daily time frame, and there's a whole lot of space, about like more than 2,000 pip difference from where price is, about 3,000 pips. So you see, you could make money off here, but then it's not making money. It's not that you're focused on. So it's this high that matters. So long as price doesn't cross above here, anything happening in between here is just in between, because price keeps making. Example, let me show you another example in Terrain. Price came down, lower low. It couldn't make a new low. Then it went on ahead to make a new high, came back, tested this high that it broke, right? Then went on to make a new high, tested this high that it came meant to make a new high. All of a sudden, what happened? It came. We are expecting it to go as usual, but then it couldn't make a new high again. Rather, it couldn't make a new high again. Then it broke, came back, tested that level, dropped, came back. Would you say there's a shift? Yeah, there's a little. Then it's very tricky. You would have to identify that particular high. Did it close with the body? It didn't, so it's an equal high. Then it went on to make a new low, came back, couldn't make a new high from here, right? But then this place is the follow price, and somehow price found a way to equal high. A new high is created, but then we would not say this would have been a shift. We would be expecting a retest here and continuation here, but look at what happened. Market came and took out this low again. So the uptrend matters. it's not uptrend. Look at market took out body closure. So what we'll be looking out for in this kind of situation, yeah, you would have been correct to say higher high, higher low, higher high, higher low, then a new higher high, right? But then it violated. So this tells us that this was just a retracement to test this level. And if you check, you'll find a story behind it. What happened? Price came, tested that level, and continued to make new lower lows. So price came back to that same zone. Now it's here. So in this opportunity here, if we would be looking, we'll be looking for the retrace. A new low is created, so we'll be most likely looking at a retracement to that level that was broken and looking for a new low. But then in the case that otherwise happens, where this comes and take this, then it's a different story entirely. So that's how we are able to read and know who is in charge or not. This is one asset, like, right? The same concept applies to whatever asset it is you take. Right. So higher high, higher low, higher high, higher low. In an uptrend, these lows should not be taken out, and you would have said that here this low was taken out. So then therefore, what does this mean? What is this trying to say? Because a new low was created here again. Market came, took out this low, so we are in a downtrend still. This was the low. It came up, it couldn't, like, price was coming from this level, this high, came, made a new low, came, couldn't break, even reach the previous high, but then still went on ahead to make a new low, right? But then you would see in between that a new higher high, higher low, higher high, higher low, higher high. Then here was the shift. It tested, it came, took another low out, tested, and we are looking at market will take like this. So that's how you identify an uptrend and a downtrend. Then you use because every of these previous low that reversals happened, something is there which is support, either a support, this was a resistance, but then it got broken. So that's how to read market structure. And also for downtrend, that's how to read market structure. This is the very most important thing in helping you identify what a ranging. This is what will help you to know that if this market is a ranging market that you should stay away from. This is the market condition you want to stay away from. If it's an uptrend, you'll be looking for buy opportunities in uptrends. Then in downtrends, you'll be looking for sell opportunities. But either way, anyhow it is, you can, depending on what you're looking out for, you see it. So it's better I recommend you use 1 hour, 4 hour to do and identify these things, because if you use the lower time frame, you might get confused. What do I mean? If we come to but it works like across all time frame, but just know, so what do I mean? You would have said this is an uptrend until this happened. This was a mini uptrend, right? Price was, this was a previous low. It came out, created a new low, came back, couldn't, this you would have said is a break, because it closed, this body closed, but then it couldn't make a new high now. Whether make a new high if you change actually, because if it was actually a change when it took out this high, and would have been expecting a new high, but then what happened? It couldn't make a new high. Then it came down, it broke this level with a body closure, and still broke this level again with a body closure, right? So here alone has already identified whatever the support is, price. Let's see how long it holds, and the way this level is holding, if price breaks this level, it's gonna go a very long way down, because you could see that everything is happening to this table here is the one just holding price, and else price is in a downtrend, but then it's meeting a very strong support. But then that's not your business. Your own is to identify who is in charge, and made a new low, came. We would have been expecting a retracement to test this level, which is here, and next logical thing we would have been expecting a new low. But then watch what happened. It couldn't break this low. It went on ahead to break this low. So it means for the interim, for the short term, market was bullish and you would have been active, because each of these line you are seeing, these blue lines in between, they are days. This is Thursday, this is Wednesday, this is Tuesday, this is Monday. 1, 2, 3, 4, 5. So for 5 days from here, this was what happened. And on Monday, market, people would have been expecting to sell, but then market opened on Tuesday and it made a new high. So what would have been a new high? So you see low, a new low, a new lower high, lower low, lower high, lower low. It took out this guy, lower high, and higher high, sorry, right? Higher low, higher high. Would have been expecting normally, market to just retrace, and make a new high again. But what happened? Market came all the way. Look at this low that we identified. It was taken out. So it tells you the bulls have taken over. It took out this low. It still came out and took out these two lows. So what we'll be looking out for right now is some sort of retracement to this level, then continuation to break above another low, right? But then in the case that otherwise happens and this guy gets taken out, what you are going to be doing is waiting for it to respect. So for market structure to happen, you have to be very patient, because for you to have been able to identify this, you ought to have waited. Monday nothing was clear, but when this happened on Tuesday, on Wednesday you would have caught the buys. Why? So it took 3 days before you would have been able to buy for the short term. Look at this particular, this was the low that was created. Let's use this guy, this high here. Yeah, so let me remove this guy. Yeah, so this was the high, but then on Wednesday, when market opened, we went on ahead to buy, and it made a new high, and you would have bought from here depending on where you were targeting, right? You would have even gotten to buy, like when market indicated this, you would have started looking for the buys when this happened itself, right? And the market came to retest this level. So question you're going to be asking yourself, is this thing that came here, that happened here, like, right? It depends on where you pick the story from. So that's why important you start from daily. If you just come 1 hour, or maybe you just go 15 minutes, here was a resistance, and now it was broken and price came all the way back to test, and now you could see what's happening right now. Look, this was the question is which high was the one that took out this low. You would see that it's this high. So your conversation here is not with any of these guys. The conversation here is where was the push that broke this guy? You'd see that it's from here. Price broke this level, tested it, broke this level. So this guy and this high here are the important highs to you, these particular highs. So you would say market is bearish until they get broken. So this high and this high are important in you knowing. Before you are bullish, you say that, yeah, because question you'll be asking yourself, this thing that happened here, did it happen to come and test this level so that it will continue like to the upside or what? That question will only be answered when these two guys get taken out. But so long as price is riding there below them, whatever it is that comes here to be more like a retracement to make a new low, right? So that's how you are able to read market structure. Let me pick another different assets and give you a quick example again. So let's go. Let's pick let's pick a random pair, a very random pair that let's pick Ethereum. You know what Ethereum is? I don't trade it. I don't know, but I just want to show you that this works across all assets. So what I'm going to do anytime I pick a new chart, if you see a pattern, I go to the daily. Usually I would start from the weekly. So for you to understand this better, I do pre-market analysis I have a playlist somewhere in my YouTube, just check it. See pre-market analysis, how I build my trade ideas from scratch for each week that will come into, and that's going to help you see, like, okay, if you were to be in my shoes and you were to read a chart, what would you do? So let's pick the story. We are on weekly time frame, mind you. So here we have a low, here we had a high, and this low, it took out this. Is kind of like, this was a range, right? This zone here, market came, it couldn't break, then came here, a new lower low. So we would have been expecting a new lower low, then we'll be expecting a retracement, something like this, because this was at some point, this was the guy here, this was the conversation between here and here, right? And then market couldn't make a new high, couldn't make a new high, and came all the way and made a new low. So what would you have been expecting? Just based off what we say, you would have been expecting a retest, just like here, and continuation for a new low, right? That's the normal thing you would have expected to happen. But then look at what happened. Market took out, it started respecting quite alright this previous high, because for this to happen, you could see in between the lower low, lower high, lower low, lower high, lower low, lower high. We would have been expecting lower low, but then something happened. There was a shift here, this particular high here. You see, market was respecting it quite right, but something happened and it took over this. Market took out this high again, and even went ahead and took out like this high that, like, so in that happening, look at what happened. Created a lower low, lower high, but then this was broken. Higher high, higher low, higher high, higher low, right? But then look at what happened again. This same guy was taken out again. So market came, like, he came to test this level. You see, notice something. Look at what happened though. For all this while, market for weeks, mind you, each single of this candle you are seeing on weekly time frame, it happens one week, 5 days. So just imagine how many days it took for price to come to this level. It started respecting it, was something happened, it took over there again, lower low, took out this low again, this low, took out this low, lower low, lower high. Now a new low is created, right? But then here is still a support level, a very strong one, because anything you see here is very, very relevant. So in this kind of case, market is, this is the high, this is the low. So question is, this price coming here, is it coming to take out this low, or what is happening right here? Because lower low, lower high, lower low, lower high, lower low. So what we are expecting ideally is just a retracement, then continuation. But in the case that this guy gets taken out, so here now we've built the story and we've seen that this high here, right, is the conversation. So what are we going to do? So we know that here there's a buy here, but then we are seeing this buy as retracement to continue to the downside. So we'll drill down to daily. So look at the high here, and then you could see what's happening. So look at the low that was there, and then look at what's happening right there. So price normally is supposed to retrace, but then look at what happened. Price came lower low, lower high. It failed to break this low. Then it went on ahead to break this high. So from what we say, what would you be expecting? In the bigger time frame of things, except this guy gets taken out, that's when we say overall bullish. But then for the interim, short term, you could still take a buy, because look at what's happening here. A new low, a new high is created. It's just even being created. It just took out this low, and from here you could be looking to buy from this level with your stop loss here. And then you make sure you be cautious of these lines we mark, either you take your profit before them or here, right? And then safer zone to take is here, because you know that whatever buy you are seeing is a retracement. So yeah, in higher low might be being created, but then look, see this was happening from here. Now we are in the 4 hour, it couldn't break. Now market took out this high, it's back at that level, tested it, it's here now again, and it's looking, it hasn't taken out this particular guy here, right? But when it takes out this guy, then the conversation change. So here we have another mini high. Has it taken it out? It hasn't. So it's failing to make a new high, or what? Yeah. So a new high hasn't been created yet, because these are just weak. But if your body closes, we'll say new high. So there's a range between this range here. So you could buy from here, this level, and buy from this level, and then target, here. So that's how we did market structure to know when to buy and to sell. Then you mix it with support and resistance. So I hope with these examples I'm able to give you. Next, what I want you to do is practice. So you'll be depending, because what we basically do when we buy or sell, you're depending on these lows to keep your stop losses. Stop loss, if you remember what it means, right? And you have 1 to 2 risk reward from here. That's if you don't want to risk it. And you could see market is buying from here. Here was a resistance. You could see where support and resistance are coming in play. Eh? Here was a resistance, but then price broke above it, came back, tested it, and now it didn't make a new high, but it came back to look for more strength, right? So So in between this zone, you could buy at this level, then take out your profit because you don't know yet if it's gonna make a new high or not. So that's just a little example. I took my time to explain this market structure because it's a very important concept in helping you identify trends in the market. So your homework, your assignment after this lesson, I don't just want you to watch. I said a little tax. Your tax here is to um, identify the market structure on XAUSD and any pair of choice. Pick like 5 different pairs and identify the structure. Then you can send it to me on my Telegram. Reach out to me on Telegram. I'm always available. Let me know in the comments, reach out to me via any platform. And if so far so good, this has been helpful to you, like, share to someone you know that this is going to be helpful to. And in our next lesson, we're going to be looking at the next thing, which is trend line. It's another important factor because what we are doing now, I'm just teaching you about structure and trend. Because what you are doing as a trader, you are trying to identify who is in charge in a trend, then you are following that trend to make decision because we are not the one moving the market, we are just following some other big guys. But in a market structure will help you identify that. Trend line also will help you identify that. Support and resistance levels will help you identify the zones to get in. So yeah, see you on the next class. See you in next class and do well to practice.